In the previous video, we rated symbol MNRA through the lenses of Hedgy's 4 industry gauges. If you haven't seen it yet, you should check it out. Here we'll continue to validate Hedgy's industry buy rating by comparing MNRA's Hedgy scores relative to their BioTech Industry peers. In our first scatter chart, we'll examine each firm's cheapness relative to momentum across the biotech industry. If you follow us, you know the chart's top right contains firms that are cheaper and demonstrated stronger momentum. They are most desirable. The bottom left space displays expensive firms with poor momentum. Machine learning methods suggest that the top right firms outperform the bottom left firms. MNRA has a below-average cheapness score, but its momentum score is pinned at 100. When viewing the entire industry through the cheapness lens, you can see that MNRA is neither expensive nor cheap compared to its peers. The majority of the biotech firms have cheapness scores that fall below the 60th percentile. The momentum lens shows MNRA pinned at 100 with very little competition. The score can't get any higher, so we should monitor to see how long they can keep momentum pinned at 100. In our second scatter chart, we view the biotech industry through the remaining 2 lenses. Here we can view a firm's sentiment relative to their profitability scores. MNRA's profitability and sentiment percentiles show us that they have the best quality financials and that Wall Street analysts love it. This combination is a strong buy indicator. Visualizing the biotechnology industry through these 2 lenses clearly demonstrates the dominance that MNRA holds over its peers. As covered in the previous video, our return forecast is for MNRA to outperform the market average returns by 25% in the next 12 months. The charts presented in this video validate that prediction. Please join us in our next video. We'll compare MNRA to the broader sector, which includes pharmaceuticals and the life science industries.